So welcome everybody. Great to see so many of you in attendance. The number is 29 so far and more coming every minute. So as you know, Kilkenny Chamber is all about representing and supporting businesses. And it's never been easy to run a business successfully. And particularly now that the additional challenges brought on by the COVID pandemic, they make it even more difficult and more challenging. So never before has it been more important to have a solid, robust, professional chamber batting on your behalf, providing you with the supports and information that you need. So in addition to running the daily demands of your business, it's really important that you keep abreast of new developments, schemes, initiatives, and all the things that the government are bringing our way throughout this pandemic. Conscious of how busy you all are, the Chamber is bringing this information to you, presented by experts and other members of the Chamber. And it's giving you the opportunity then to put your questions forward and have the answers that you need. So I'm going to introduce our speakers now in a second. Today's topic is about the Employment Wages Subsidy Scheme, and we're looking at it from a tax perspective. As I say, we're going to run a poll at the end, so that will give you a bit of feedback as well as to how everybody online is feeling about what we're talking about as well. So you'll get information of all sorts. So our speakers today are from PwC Ireland, which is the largest professional services firm in the country. They provide integrated audit, tax and advisory services to Irish and international businesses. And with offices in Dublin, Cork, Waterford, Wexford, Kilkenny, Limerick and Galway, they have the country well covered. And today we are joined by two of their finest to talk to us about the new Employment Wage Subsidy Scheme. If anyone can help us gain an understanding of this scheme, it's our speakers today. So first we're going to have Ciara O'Connor, and Ciara is a senior manager in the PwC Southeast Tax Group and has been working in PwC Waterford for the last 17 years. And Ciara is joined by Jim McLean. Jim is an AITI Chartered Tax Advisor, and he works as a tax director with PwC, also based in Waterford. So Ciara and Jim, you're both very welcome. Ciara is going to start the presentation and do a brief summary of the existing scheme, the TWSS, and highlight issues that have arisen over the lifespan of that scheme. And then Jim will take over and cover the new EWSS scheme, including the basic rules, some practical aspects, and do a comparison of the two schemes. So without further ado, I'm going to hand over to you, Ciara, and we'll put up the slides that you have, and you just let me know when you want me to move on and so on.
Perfect. Thank you, John. Just to make sure you can hear me clearly.
Yes, I can hear you loud and clear. Great stuff.
Perfect. You can move straight on to the first slide, John. So okay. Welcome everyone, and thank you for joining us here today. I'm delighted to be presenting to you on this. So as John mentioned, my role is to think it's helpful for us to have a quick overview of the scheme that has existed to date and is still relevant until the end of this month, because of the fact that it's still relevant and the issues that it has presented are still relevant and will continue to be so for some while to come. So I suppose, as everybody is aware at this stage, the temporary wage subsidy scheme was first introduced back on the 26th of March at the beginning of all of this madness. And to date, it has been availed of by over 65,000 employers, covers more than 410,000 employees, and at this point has cost the state in excess of 1.6 billion. And obviously those numbers are going to continue to increase until the end of the month. There have been various phases, updates and iterations of the scheme as we went along. And for anyone who's been following the Revenues Frequently Asked Questions manual on this, you might have noticed that we're now on version 17, which is 76 pages long. So it has by no means been a straightforward or simple scheme, and there have been many nuances and difficulties encountered by employers as we went through. The primary objective, obviously, of the scheme was to keep employees on the books, preferably at the same net pay levels as they were used to throughout the period of the pandemic, and then to assist employers in meeting the costs of so doing. It was due to cease on I think it was the 18th of June initially, and obviously was pushed out then until the end of August. And as we now know, with the introduction of the Employment Wage Subsidy Scheme, that has taken effect from the 1st of July, there will essentially be an overlap of the two schemes for the period of 2 months. So just moving on to the next slide, John, looking at the difficulties, I suppose, the issues that we encountered with clients as we went through the iterations of the scheme. At the outset, the first one was in terms of meeting the eligibility criteria. And I imagine it's going to be the same for the new scheme, but there were so many uncertainties at the time. So the basics of the eligibility criteria were that the business had to be suffering significant negative consequences of the pandemic, which were demonstrated via at least a 25% drop in turnover or customer orders in Q2. And the point I suppose a lot of people tend to forget, also an inability to meet normal wages and outgoings. We had the issue at the start as well of companies not being fully clear on whether, if they had substantial cash available to them on the balance sheet, whether that would push them out of the scheme. Thankfully, we got clarity on that, and it wasn't an issue. Then as they got into the calculations, there was a substantial volume of calculations required at the outset on the average net weekly pay and what that resulted in terms of a subsidy payment and the potential top-ups. It created a minefield for employers in creating those calculations in some cases. Thankfully, as we got through to the operational phase, Revenue then produced their CSV file, which contained all of those details for employers, simplifying things for anybody joining the scheme at that stage, creating confusion for others who had done calculations that may have been different. So that too created its own difficulties. We obviously had to consider the issue of pensions. So you might recall you weren't able to take any deductions from the subsidy amount because it was designed to ensure people continue to get their same level of net pay. So that again created difficulties with employers and employees in terms of how they could continue with pension contributions and or any other deductions that were being taken from net pay. You may also recall there was the transitional phase where, in order to keep things simple, Revenue had chosen to pay everybody the €410, despite the fact that not all employees would have been entitled to that amount. So the employer was receiving a payment of €410 for a number of employees, where they were only meant to pay a lower amount out to those employees. And so employers have had to, I suppose, keep that money aside, knowing that it will be recouped by Revenue in due course. There were also issues in terms of employees not on the February payroll, who were automatically disqualified then from joining the scheme. There was issues with people being taken on who had been let go because it made sense for one way or the other, for them to instead maybe claim the pandemic unemployment payment. And when employers were coming back into business and wanted to rehire them post-May, there were some issues with that had to be rectified. Sorry, now moving on to the next slide and continuing with those issues, I suppose, as we saw them. In the case of any employer where they didn't have full compliance with payroll obligations, this also knocked them out of the scheme. And I had come across a couple of cases, certainly, where there were very legitimate reasons why employers might not have had full compliance. And yet there were no exceptions. Revenue took a hard line on this simply because of, I suppose, the speed with which the scheme had to be implemented. And so if an employer had not been compliant with all of their employer tax obligations, they simply were not eligible to make use of the scheme. You may also have come across the issues with tax refunds. So what happened is, because most employees were receiving significantly less taxable pay now via the payroll, there was a cumulative gathering of tax credits, which was resulting in tax refunds being created for employees. And there was I suppose, a lack of understanding among employers on what they were to do with this. They were allowed to pay it in addition to their subsidies and indeed their top-ups, but there was a lack of understanding around whether they should reduce that amount from the top-up, etc. Now, in recent times, Revenue have moved to the week one basis of tax credits for all employees involved in the scheme, which essentially gets rid of the tax refund issue. But ideally, if this had been done at the beginning, it would have made things a lot clearer, particularly because, as you're all aware by now, while the subsidy amount is not subject to tax via the payroll, it has been made very clear that it is subject to income tax in the hands of the employee and will ultimately be collected by Revenue by the process of a year-end review. So if tax refunds hadn't issued to employees, those tax credits would have been available to shelter some or all of the tax liability that might ultimately arise on that. So that all, I suppose, feeds into kind of negative sentiment that can be there sometimes with employees around that. And that's on to my next point, because employee communication was a key facet in this that we would have been speaking to clients about from the outset. I suppose speaking to the employees and making sure they're very clear on what's happening here, and clear on the fact that this would ultimately be subject to tax, the impact on their pensions, etc. And it certainly has caused a lot of problems for certain employers where that communication wasn't necessarily there, and has in some cases caused some disquiet among employees when ultimately things become clear to them. One other point that had come up quite a bit is around divisions. So where you had certain employers where maybe in the overall their business wasn't suffering the 25% drop, but there were certain divisions of the business that certainly were and had collapsed entirely in some cases. Now they got some agreement, we got agreement from Revenue that in those scenarios, if there was very distinctly separate divisions that had existed prior to COVID, then yes, they potentially could qualify. But it also created difficulties on the other side where a business may have met the 25% drop in the overall, but there were certain divisions of the business that were actually busier than ever. And there were difficulties created there where they needed to reimburse employees for working overtime or working bank holidays. And essentially, they couldn't do this while still operating the scheme for those employees. So that all created difficulties, and a huge one that existed for them was a publication concern and what that would mean for them. Now, again, it was pointed out that this would be normal protocol for Revenue and any sort of grant aid, and therefore that there shouldn't be any concerns. And so just looking now to, I suppose, to the next slide, John, on so where we are now with the temporary wage subsidy scheme, there's not long left in the scheme, but there are certainly still a number of considerations for employers. First of all, for the last couple of months, it has been the continuing eligibility to partake in the scheme. So we have been told that the same eligibility criteria are relevant. So you're still looking at the 25% reduction in turnover or customer orders for Q2. And that should be fairly clear for anyone at the moment. Because you've now finished Q2 and you can tell whether you've met that. But I suppose there's also the second piece of it, which it was that it wasn't just that 25% drop. There was also the requirement that that drop resulted essentially in an inability to meet normal wages and outgoings fully. So you have businesses now returning to some sort of trading, may not be normal in a number of cases, but there are variations on this. So for businesses to know when do they need to come off the scheme, what they should be doing in terms of reducing the levels of subsidy. And the guidance that has come out from Revenue on this is that as businesses have recommenced to trade, and as they return to some level of normal trading conditions, there is an expectation that employers would start to contribute more to the wages of the employees, which would mean a higher top-up amount essentially, and thereby resulting in a natural reduction in the amount of subsidy being payable. Obviously, if an employer is back to a level of normal trading and has a full ability to meet normal wages and outgoings, then there is an argument that that employer may need to cease making J9 submissions, cease their involvement in the scheme and return to normal PRSI. But it's quite difficult for employers because while they may be back to normal levels of turnover, nearly every business out there is experiencing significantly increased costs in going back to business, and obviously had a significant drop for the period of closure. So it's not an easy decision to make. Obviously, the compliance letters have now started issuing in relation to the scheme. There's a general list of queries. They're looking for your eligibility criteria, the impact of COVID on your business, pay slips and calculations. The letters are standard and everybody's getting them essentially over a period of time. But the difficulties with it is there is a 5-day turnaround time, which is not a lot, especially at this time of year when you may have employees out on leave. So you really have to be prepared for these letters and ideally have the response prepared almost in advance of getting the letter, so that this can be submitted within the time frame granted. Also, what's somewhat concerning about it is that they're very much extending those compliance letters beyond the basic scope of the temporary wage subsidy scheme. So they have clearly stated that they will also be using these compliance checks as an opportunity to review employers' compliance with real-time reporting obligations for 2019 and 2020. And therefore, it's important for employers to take a look at their employer tax submissions for 19 and 20, review those and be comfortable that you're happy with the submissions made over those periods. So ideally, you're prepared for any such questions that might arise as part of this. Revenue have also said that they will be essentially reconciling all of the numbers in the wage subsidy scheme in Q4 of this year. So that will involve obviously a check of the amounts due versus the amounts that were paid. And in relation, say, to the transitional phase where there were overpayments, they will be seeking to recoup those overpayments at that point. One of the things that came up that is very much rearing its head at the moment in relation to the compliance checks is the fact that where employers review matters or where revenue have raised questions and it's recognised that actually there were errors in some of the submissions, you can't reopen a J9 payroll submission. So in any case where an employer has been part of the scheme and there was an error in how it was operated, you can't simply go on to RAS and amend your payroll submission. Any corrective action to be taken has to be done via separate submission to revenue. So again, it attracts a little bit more attention and takes a bit more time and effort. The point I mentioned there earlier about the employees and the fact that obviously any subsidy that they received is subject to tax. We have gotten some guidance now from revenue where they're saying that what will happen is each employee's 2020 tax position will be reviewed at the end of the year. If there is a tax liability arising, that would be collected by way of reduction in tax credits. They don't plan to do that in 2021. They plan to push it out to start in 2022, and it can be spread over a period of up to 4 years, depending on the numbers involved, which I think is a positive to communicate to employees because there's quite a spread over a number of years there, so that they shouldn't notice as much the reduction in their credits in terms of claiming that. So that's kind of a whistle-stop tour of the scheme that was there and the issues that we've encountered and continue to encounter in relation to it. Jim's now going to move on to talk about the new iteration of the scheme, the Employment Wage Subsidy Scheme, and how it compares and contrasts with this one. If you have any questions on my side of things, obviously put them through and we can deal with it at the end.
Thanks, Ciara. Can just nod, Ciara, can everybody hear me?
I can hear you, Jim.
Fair enough. I'm assuming everybody else can. So, Grant, thanks, Ciara. I'm going to look at the new Employment Wage Subsidy Scheme. Now, thankfully, Ciara didn't use the phrase TWIS, nor will I use the phrase e-whiz, which is what revenue officials tend to use all the time. It's dreadful stuff, so I promise you I won't do that. The new Employment Subsidy Scheme is, as most people know, is intended to kick in from the 1st of September and run for 6 months. But essentially, it's going to run in parallel. It actually kicks in from the 1st of July, although it will eventually replace the TWSS, the Temporary Wage Subsidy Scheme, in its entirety with effect from the 1st of September. Now, that's important. It's only for pay dates from the 1st of September onwards. One of the queries that has come in is what should people be doing for the August payroll to bring new employees into the EWSS? And hopefully you'll get a sense of that as we go through it. But essentially, this is about registering for the scheme. And in the payroll run for the 1st of September for that particular employee, then there is a process to be followed involving adding EWSS to a particular field in the payroll software. It'll be covered in more detail next week when CR Payroll are doing a session on all of the actual practicalities, which I think John will confirm, I think is this day next week, that session is being run. But it does bring the point out that this scheme now is available for new employees, and as new hires, they wouldn't have been entitled to benefit from the Temporary Wage Subsidy Scheme, but they may be entitled to this new Employment Wage Subsidy Scheme and may be entitled from the date that they have been hired, perhaps back as far as the 1st of July, which again, we'll talk about in a moment or two. The first couple of slides are really just a high-level overview, and we'll talk in a little bit more detail on later slides on each aspect of it. The basic terms are that an employer should be able to demonstrate that there has been or will be a 30% reduction in turnover or customer orders in the period from the 1st of July to the 31st of December compared to the same period in 2019. And there's a little bit more in that, which I'll talk about in a few minutes. It does allow the inclusion of employees who did not qualify for the temporary wage subsidy scheme, either because they weren't on payroll at the 29th of February or for other reasons. Much simpler system. It's a flat rate of 151.50 or €203. And more importantly, it's based on gross wages. And I'll talk through what the implications are for employers of that change. The employer PRSI rate was a big part of the temporary wage subsidy scheme. It was reduced to 0.5%, not just in relation to the wage subsidy, but also any top-up wages the employer paid. That is continuing. There was some doubts that that would be the case under the new employment scheme. But there is no class J9, which was the simple mechanism you used in order to apply for the temporary wage subsidy scheme. There's a different process involved. And again, I'll talk you through that in a few minutes. But the important thing for people to remember is the PRSI rate is going to remain at 0.5% for employer PRSI. What most people would refer to as a claim back or a backdated claim revenue are now calling a sweep back. So you can actually, if you had employees who didn't benefit from for the temporary wage subsidy scheme, but who would meet the criteria under the employment wage subsidy scheme, you can make a claim from the 1st of July for those employees. So a couple of other practical issues, though, that need to be addressed. You must register through ROS before applying for the subsidy. You can't apply for the subsidy if you haven't done so. The registration process has been available since last Tuesday, 18th of August. Importantly, it must be understood you cannot register for the scheme unless you are tax compliant. You must have a tax clearance certificate. There is a monthly self-review required. And if you're no longer eligible because you don't meet the criteria following that self-review, you must sign off immediately through ROS. And Revenue have indicated that they will be carrying out compliance checks to make sure that people are meeting the criteria throughout the 6 months of the scheme. And finally, like the temporary wage subsidy scheme, people who avail of it will have their names published in Irisifigul, and that will be in January and April 2021. So next slide, John, please. Thank you. So employer eligibility, as I mentioned, this is a 30% drop in turnover or customer orders in the period from July 20 to December 20 compared to the same period in 2019. Now, there are provisions made for situations where a business wasn't in existence on the 1st of July. For example, didn't start until the 1st of September. You look at the equivalent period for comparison purposes. But that's going to give rise to difficulties because generally speaking, a business that is just starting up won't have built up a level of its normal level of earnings. So earnings are probably going to be a little bit suppressed anyway in the initial period in 2019, so that even though COVID-19 has significantly impacted on the earnings in 2020, that won't necessarily show a 30% drop compared to the equivalent period in 2019. Now, there is provision allowed for that, and Revenue will allow that if you can't show statistically a 30% drop in turnover or customer orders simply with a direct comparison of 2019, they will on a case-by-case basis accept other bases on which to demonstrate that there's been a 30% drop. So for example, the startup business might have been building towards a certain level of turnover, and the projection for the remainder of 2020 was, say, a million of turnover a year, but because of COVID-19, you can demonstrate that that is now going to be an awful lot less, and down at, say, 600,000. That might be significantly greater than the equivalent period in 2019 in the initial startup phase of the business, but that would be a basis for getting Revenue agreement that you can have the employment wage subsidy scheme. So it's case by case, but the starting point should be turnover or customer orders. It is important, though, you will need to be able to demonstrate to Revenue that it is as a direct result of COVID-19 impact and not some other factor. simple example would be impact on high street retail stores who are impacted by a shift by people into internet buying. That's not COVID-19, although there's anecdotal evidence that people are doing more internet buying because of lockdown. But anyway, that's the basic eligibility. Keir already mentioned a cash reserves issue. It's not even a question any longer in relation to the Employment Wage Subsidy Scheme. In the period July-August, employers continuing to avail of the temporary wage subsidy scheme might have been able to demonstrate that their Q2 earnings were down by 25%, and that was the basic test initially. But there's a second element to the test, and that was that the employer hadn't got the ability to meet normal wage costs. But if turnover has been restored in July and August, the employer nonetheless meets the Q2 test, but if turnover is back up to normal levels and there are significant cash reserves, there is a question mark over whether they're entitled to the temporary wage subsidy scheme because there is an inability to pay the wages. That is no longer an issue under the Employment Wage Subsidy Scheme. It's a very simple test, 30% drop, you're entitled to avail of the scheme. Ciara also mentioned business divisions, and there is a small change in these rules here. If there are individual business divisions within the business that are not suffering a 30% drop, those businesses cannot avail, or the employer cannot avail of the wage subsidy scheme in relation to those business divisions. The other side of the coin, though, is a continuation of the existing practice. If there are individual business divisions that are suffering a drop, but that the business as a whole is not suffering a 30% drop, then the employer can avail of the subsidy scheme for those business divisions. But there are rules set out in the Revenue's guidance notes as to what constitutes a separate business division. And it's fairly restrictive, and it does require that there is a separate management structure in place for this separately identifiable business division. For employers that have employees paid across multiple payrolls, and that might indeed be where there's several different business divisions and somebody has part of their wages paid through different payrolls, only one subsidy is available, and the employer is required to ensure that all of the payrolls are aggregated for the purposes of excuse me, of the subsidy. But if an individual has multiple employments with unconnected employers, then each individual employer is entitled to claim the subsidy separately in relation to that employee. So what about employees? Well, the new scheme is intended to cover an awful lot more than just the employees that were on the books at the 29th of February, and I know there's issues about rehires were resolved. So anybody that was on the temporary wage subsidy scheme, plus seasonal workers, plus any new hires in the period, plus some non-temporary wage subsidy scheme employees. So for example, employees above a certain wage level were not entitled to participate in that. They are all now covered by the temporary wage subsidy scheme. The rates, as I said already, are flat rate, but the important thing is that they are based on gross weekly wages as distinct from having to be calculated based on the average net weekly pay. The claims can be backdated to the 1st of July for employees who did not qualify for the temporary wage subsidy scheme, but who would have qualified under the employment wage subsidy scheme. There will be a template form that will need to be completed, and Revenue are not yet ready, haven't finalized that yet, nor have they finalized the guidance, but that is supposed to be issued, we think, before the end of August. And then the expectation is that any claims for the subsidy will be met and paid sometime around mid-September. Now, I did have a question about proprietary directors, and that was where there's no ordinary employees, i.e. one man, one woman companies. At the moment, there are no guidelines yet. The Minister just issued a blanket statement saying that proprietary directors would be allowed to take part. for the benefit of people on this session, proprietary directors is anybody that owns more than 15% of the ordinary share capital in the company. So it's not necessarily just one man, one woman companies. So proprietary directors were originally excluded from this scheme, and indeed anybody connected with them, so direct relatives. The minister says they're going to roll back on that. I'm not sure that that went down too well in revenue, because revenue are now looking to negotiate with the Department of Finance as to who should and shouldn't qualify. So again, we don't have any guidance on that yet, and it may be another week or two before we see anything from revenue on that. The rates, you'll see, sorry, John, just to finish, the rates on the right-hand side are straightforward. If somebody was on maybe part-time work, earning less than €151.50, that person is not entitled to share in to the subsidy. Earnings between 151 and 203, the subsidy is limited to 151. Between 203 and 1462, it's paid at the flat rate of 203. That's the band where you can see that there are some people who wouldn't have benefited from the temporary wage subsidy scheme because their earnings are above the, what was the figure, 956? I can't remember the exact figure, but will now benefit from this subsidy here. And greater than 1462 per week, no subsidy is available. This is the PRSI issue. I did mention it already. It will continue at the rate of 0.5%, but because this is now moving towards a system where ordinary wages are being paid, the employer is required to apply the normal PRSI class rate for the payroll submission to revenue. So in making the payroll submission, if it's class A1, then it's the 11.1% employer PRSI rate needs to be included. There is no equivalent class J9 available with effect from the 1st of September for this new employment wage subsidy scheme. So revenue and CR payroll will cover this next week as to how you do this, because I'll be absolutely honest with you, I don't know how it's done in practical terms, but CR payroll will cover this for you next week. There is a field designated as other payments that is available on the payroll submission. When you're making a submission for an employee for whom you wish to claim the subsidy, you must put EWSS in this other payments field. And that is essentially the equivalent of putting class J9 under the temporary wage subsidy scheme payroll submissions. It is essentially your claim for the subsidy. When that is identified by revenue, they will apply a credit for the excess PRSI so as to reduce the net amount of PRSI payable to the 0.5%. So the net payment that will be notified by revenue on the payroll notification to be paid on by the 14th of the month, that will reduce the net cost to 0.5%. But in processing the payroll and in making the submission to revenue in the first instance, employers will be required to put in the correct rate determined by the PRSI class. Some of the practical issues to address, as I said already, you need to register for the EWSS before applying for the subsidy through the payroll. But before you can apply and register for the scheme, you must be up to date with your tax affairs. And that's not just the employer, but all connected parties. So a sole trader, that's just the individual, and anything to do with PAYE, VAT, income tax, that has to be completely up to date. But for a partnership, it's every partner in the partnership must have their tax affairs up to date. For a company, it's every director in the company must have their tax affairs up to date. Now, most people think that's grand, I have my affairs up to date. But there are 16,000 of currently eligible employers availing of the temporary wage subsidy scheme who do not have a tax clearance certificate, because not everybody needs one. Sometimes an employer needs one for a license. Sometimes it's because they're doing work for a state body and they need a tax clearance certificate. Sometimes it's an individual applied for them because of grant aid for supports for university or whatever. Bottom line is, if you think you may be entitled to avail of the employment wage subsidy scheme, then double check, go online and check for and apply for a tax clearance certificate. Make sure that if you are a company all of your directors do the same, because without that, you will not be allowed to register for the EWSS. It's important to understand as well, though, that not just that you have to have a tax clearance certificate before you're even allowed to register, but throughout the duration of the scheme, as long as you're claiming it, you must remain compliant in all respects in relation to your tax affairs. What might seem obvious, but which is nonetheless included in the revenue conditions, is the employer must be registered already for PAYE and USC. I'm not sure why that's included. It does seem like a fairly obvious thing. Normal payroll process applies. So this is the practical side. This is no longer, this is a complete switch. So for the last 4 months, 5 months, whatever, employers have been used to paying a net weekly wage to employees comprising the temporary wage subsidy and maybe a top up in wages. Sorry, just see a question. Did Jim say that all directors must get a tax clearance certificate as well as the company having one? Yes. That is the point. Not just the company that's applying as the employer, but all of the directors in the company must have the tax clearance certificate. So yes, you must have the application. Normal payroll is now going to come into effect from the 1st of September. It's no longer the net weekly wage payment type system. So it's a normal payroll process. The application is made with the EWSS designation in the other payments field, and that will ensure that the revenue will pay the wage subsidy to the employer. And it is paid directly to the employer with no requirement for the employer to pay that on to the employee, because the employer essentially is paying normal wages to the employee from now on. The subsidy will be treated as taxable income for the employer, but it will not be included for the purposes of the 30% test, i.e. has your turnover dropped by 30%. So excluding the subsidy, has turnover dropped by 30%, that gives you your entitlement to apply for the scheme, but it doesn't go around in circles, if you know what I mean. It's ignored otherwise. Claims cannot be backdated after the 1st of September. So if you think you're entitled to avail of the scheme, you need to get on board now. You can't wait till October and then try to backdate it for the 1st of September. It won't be allowed. Backdating only applies for the temporary parallel period for July and August, while this scheme is running in parallel with the temporary wage subsidy scheme. As I said already, there is a monthly self-review required to ensure ongoing eligibility, and there will be some compliance checks by revenue. The important thing is, if you do the review at the end of the month, then you must sign up, and you find that you're no longer eligible, you must sign off immediately through ROS, and revenue will be imposing penalties for employers who fail to do so. There's some anti-avoidance provisions in the whole thing, and it's really aimed at stopping unscrupulous employers laying one person off and hiring 2 more so as to get 2 subsidies, or adjusting the wages of somebody who might be on too high a wage. Let's say they're on $1,500 a week and 1,462 is the limit, so they reduce the wages to 1,460 and now they get a €200. I can't see it happening very often, to be honest, but it's built into the provisions, and revenue have made an issue of it in a presentation I've seen them do. Like all of these things and all of the tax affairs, employers will be required to maintain records to support the claim that they meet the 30% reduction test. And as I said, revenue will be carrying out some compliance checks. So there's a question in there. Sorry, I'm not picking up all of the questions. Just every so often I glance at one-liners and it's easier to pick them up. What about monthly paid employees? Yes, everything I'm talking about and everything in the revenue guidance is about weekly paid, but CR payroll will deal with the issue of monthly paid employees. Like the temporary wage subsidy scheme, all of the numbers that you see in terms of the wage subsidy and so on will be adjusted to reflect monthly paid employees and not just weekly paid employees. So I have a couple of slides here just looking at some comparisons between the two. Number one, payable to the employer, the EWSS is payable to the employer, doesn't have to be paid on to the employee because essentially the employee is now being paid their normal wages. This is supporting the employer. The temporary wage subsidy scheme was about ensuring employees were maintained on the books. It's always now based on the gross wages. It's not based on, I call it this fictional average revenue net weekly pay, because that was not necessarily the employee's normal net weekly pay. It was calculated in a particular way and not necessarily the same. But just to show you what the impact will be, and if you bear with me, sometimes talking figures without being able to show them on screen is not ideal. But if you bear with me, I think I have some simple numbers that will help you understand what the impact of this is going to be. Under the temporary wage subsidy scheme, let's say somebody had an average net weekly pay of €500. So that person, that employee, would be entitled to receive a subsidy of €350. And the employer usually would have paid a top-up payment of €150 on top of that to bring the wages back up to the average net weekly pay. And that's what the employee received under the scheme. Normally, for an employer to pay an individual a net weekly wage of €500, you're probably talking about a gross wage of about €800. And then when you add on the employer PRSI on top of that of about 90, you're talking about just under €900. So under the temporary wage subsidy scheme, the employer's cost went from just under €900 down to €150, which is the top-up payment that was being paid. And then the employee still ended up with €500 of cash on a weekly basis. Now the employee is going to have to be put onto gross wages, normal payroll. So the employer is going to have to pay €800 of gross wages, so that after PAYE and USC, the employee receives the €500 of their normal net weekly pay. And the employer in those circumstances is going to receive the wage subsidy of €203. So the employer's costs are coming down from €800 by the 203 subsidy down to about €600. So now the employer's costs, albeit reduced, are still going to be at €600 compared to €150 under the temporary wage subsidy scheme. And that's what the change is going to mean for employers shifting from the temporary wage subsidy scheme to the employment wage subsidy scheme on the 1st of September. The subsidy itself is only coming down by about €150, but that's the impact it's going to have on employers. It is a flat rate of payment, so there's no longer any complicated tapering rules or any of those kind of issues that over the course of the temporary wage subsidy scheme made it quite a complex system to apply. There's also no requirement to keep evidence to show the subsidy being paid to the employee, because this is a payment being made direct to the employer, nothing to do with the employee. It's not limited to employees that were on the books in the 29th of February. As I said already, it does include seasonal workers, new hires since that date, and indeed some people who didn't benefit from the temporary wage subsidy scheme because of the level of their wages. But equally, it also has no impact on employees' wages. Kira made the point earlier that people who worked bank holidays or shift premiums or anything like that really couldn't get the benefit. So just take the example I spoke about a moment ago, where an employee was on the net weekly wage of €500, comprising €350 of a subsidy and €150 of a top-up from the employer. If that employee was actually working, and let's say it's one of the divisions that was still busy, even though the business overall was suffering, but if that employee was receiving a top-up of €150, but then was asked to work a Saturday or Sunday out of the normal, other than normal working week, and was going to be paid another €150 for that day's wages, the system doesn't treat that any differently to the top-up payment. Now the employer is treated by the system as making a top-up payment of €300, but the employee was limited under the temporary wage subsidy scheme to a maximum of €500 based on the average net weekly wage. So now, instead of getting a subsidy of $350, the employee only gets a subsidy of $200, and the top-up payment from the employer is regarded as $300. But the employee still only ends up with a net pay of €500. That was a real difficulty in the temporary wage subsidy scheme. It couldn't allow for employees to receive overtime, shift premiums, double time for working weekends, or whatever the case might be, because they were limited to the average net weekly wage. That's not the case under this scheme. People are being paid their normal wages. If they work overtime, they get paid their overtime, and it flows through to them. It's the employer receives the flat rate subsidy of €203. There's no end of year review for employees because, again, the subsidy isn't being paid to the employees. As I said already, cash reserves not relevant for the employer. If the turnover or earnings are down by, or customer orders are down by 30%, the employer benefits. I think the PRSI employer process is going to be cumbersome. It'll take people a little while to get used to it. But as I said, CR Payroll may have a simple solution. It may not be as cumbersome as I'm envisaging. So CR Payroll will deal with that next week. Monthly self-review required, and you must sign off if you find that you're, if you are going to cease to be eligible. The different treatment of business divisions is slightly different. If the business as a whole is suffering a drop, but a particular business division wasn't, the temporary wage subsidy scheme could still be paid across the board. That is gone. If individual business divisions, and they are identifiable as separate business divisions, if they're not suffering the 30% drop, the subsidy cannot be payable. And multiple employments, each employer entitled to get to claim the subsidy, whereas under the temporary wage subsidy scheme, it was the employee receiving the subsidy, so the subsidy could only be a maximum of 350 or 410 or whatever the relevant number was. So we'll pass it over to for questions and answers. I'm going to scan down through some of the text questions that have been put in. I've tried to answer some of them as I was going through. In the meantime, can I just confirm that's our contact details. John will be making the slide deck available to people who have attended today, so you'll have the contact details and the slides in case anybody has any questions to ask. Kira, you might put get back on your microphone, and if I miss any of these, you can join in with me or add any comment you wish. Proprietary directors, as I said, we don't have the guidance yet. August payroll to bring new employees in. Again, it's the registration and then applying for the scheme. As I said, if the employee has been on the book since July, we are still waiting on the revenues guidance and the template form in order to know how to go about claiming it backdated to the 1st of July for these new employees. There's a question about a pub is closed and employees who are presently on the TWSS and receiving typically 350, which is essentially the subsidy flowing through to the employees. When the EWSS comes in, they would move to 250. In fact, it's 203, which is the flat rate subsidy. As they're not working and the proprietor cannot afford to pay anything, is it better to lay off these employees and have employees claim the 350? I'm not sure that they have any choice really in those circumstances. The employer isn't going to be paying anything if the employer is closed and people aren't working. I'm not sure the pub owner will have much choice there other than to lay people off. The employer won't be paying any wages. There won't be any income coming in. The pub isn't open. Whereas this new scheme is about businesses that are back up and running and open, paying their staff their wages, and the employer is then claiming the subsidy. The 350, I don't think is available going forward. I think that the reduction in the 350 for the PUP payment, the pandemic unemployment payment, which is what the employee would have to claim, that is coming down to 250 or has come down, I think, already since the 1st of July, or certainly will be from the 1st of September. But yes, I think that's what what will have to happen in those circumstances.
There was a point there on the charity, Jim, I had just looked at.
Sure.
Somebody had questioned that if a charity was getting a COVID-19 grant income, would that be considered turnover? I know certainly in the guidance on the TWSS was that charities or the voluntary sector was subject to the same 25% reduction in turnover, and because what they were saying is government funding, etc., hadn't been reduced during the period of the pandemic, it was likely that they might find it difficult to meet that criteria. But that there were, if your charity, say, was fundraising and suffered a drop in income because of not being able to do that, then it possibly would qualify. I think the question here is very specific in terms of COVID-19 grant income. I think generally what the suggestion is that when it comes to the voluntary sector and charities, that they probably should make contact with the government department who's providing the likes of the COVID-19 grant income to see whether there's an argument for them to qualify, and it was on a case-by-case basis. I don't know if you've seen anything more specific in the EWSS on that point, Jim.
No, the guidance that I've read actually doesn't address it. The only reference is to the subsidy that's being paid as an EWSS subsidy, if you know what I mean. That is ignored. I would imagine for the purposes of the EWSS that any grant aid, COVID-19 specific grant aid, would be ignored as well. As I say, that's just a view rather than that I have anything definitive for people. There is a reference that the registration date is requested on the EWSS application. That registration date is, have you registered for the EWSS? That's my understanding of it. So it's not that you're backdating a registration date to the 1st of July, but you couldn't register before the 18th of August anyway, but it's just to get registered for the EWSS. After the 1st of September, you won't be able to backdate claims beyond the registration date, but for the purposes of the backdating, it looks as though that won't be a problem. As I said, the template claim form for backdating hasn't been issued yet by Revenue, nor has the guidance been issued. Directors and tax clearance certificate is fine. Rate change from the 17th of September.
I think that's John has shared some good summary for everybody on the rates.
Oh, okay, that's John has shared. Yeah, okay.
Which I think answers some of the questions toward the end.
Can you now claim for employees paid in July and August or not? Yes, you can, and you should be. But again, as I say, the guidance from Revenue as to how you do that has still to be issued. EWSS is taxable for the employer, but not taken into account as part of the turnover for the 30% test. Can an employee be taken off the EWSS in September and put back on in October? Yes, I'm just wondering, why would you take an employee off? It's if the employer qualifies, which is the important part. If the employer qualifies, then unless the employee's earnings are above 1462, then the employee should be entitled. But I don't see why you couldn't take somebody off if that was appropriate and put them back on in October. It's about the employer being eligible to claim the subsidy for that employee at the time. If all employees are not back to work yet but receiving the TWSS, so the employee, can they still be paid to the EWSS? So this is the July-August period that they're still availing of the temporary wage subsidy scheme, but they're still on garden leave. Yes, in theory they can, but in order to do that, bear in mind the example I gave of the net wage of 500. That's costing the employer a top-up of, say, €150. And then the rest of the employees' wages are being made up with the subsidy. In order to avail of the EWSS, the employer has to put that employee back on normal wages and start paying them their normal wages. So the cost to the employer will be much higher to avail of that. I would have thought that if people are still on garden leave, then take advantage of the temporary wage subsidy scheme through to the end of this month, and then you'll have to reconsider whether you're in a position to take people back on and start paying them wages again with effect from the 1st of September. The 300, if you earned over €300, will you get €300 PUP going forward? I think that's coming back down. John has some guidance on the rates there, but it's 250. Yes, we think you do, but John has some guidance in his response there. A little bit earlier.
Okay.
Okay. I understand the question now, but the employee, that it's a reference to difficulties with a bank, where an employee is applying for a mortgage, and some of the banks haven't covered themselves in glory by making it difficult if people are on the TWSS or EWSS. So if somebody's not on that scheme, then they can answer truthfully when the bank is, are you on the scheme? And they say, no, I understand. Overseas parent company will be down 30% plus. Irish subsidy does not have any Irish subsidy does not have any customers and bills the parent company each month. The billing will be down due to a loan obtained to fund payroll payments. Can they claim? Not quite sure what you're getting at there. So if you want to give Kira or myself a call, we can tease that through with you privately. If all are laid off at the end of the month, can EWSS be applied for in coming months? Yes, that's the point. You know, it's about the employer's eligibility. If the employer meets the 30% drop test, then the employer is entitled to claim the wage subsidy for any employee that is being paid on a particular week. So if employees have been laid off and are subsequently rehired in, say, November, as long as the employer meets the eligibility test, they should be entitled to claim the subsidy.
Jim, thanks very much. I'm just conscious, I'm looking at time there, and the questions are coming in fast and hot and heavy. So thanks very much to both yourself and Kira for such a comprehensive overview. It's more than an overview. In fact, you went into quite a bit of detail in answering some of those questions. So thanks very much for that. And as you said yourself, this presentation will be available to everybody who attended if you want. I would ask that you'd send an email into Roisin, admin@kilkennychamber.ie, just to request that. And also, as Jim said, this is part one of a two-part series. So next week, same time, same channel, we will be doing the same all over again, but with a focus on the payroll aspects, how to administer through your payroll system and your processes and so on. So if you want to come to that session, you're more than welcome, but please send in an email to admin@kilkennychamber.ie so that we'll have you on our list and that we'll send you the appropriate Zoom invitation. Now, as well as doing the question and answers, I also said that we'd launch a poll, which I'm now launching. And after that comprehensive overview, and you know so much now about EWSS than you did before, now that you've heard how it works, do you think that you will be able to take advantage of the new EWSS in your business? And so if you could click yes or no as to how you think, is this one for you or not? It'd be interesting to see. I'll run this poll now for just a couple of seconds while I close off on a few other points. Just again to thank most sincerely both Kira and Jim. Fantastic presentation, and thanks as well for doing my job in running the Q&A afterwards. You just went straight into it, Jim. Fair dues to you and Kira. So there was loads of information in there. I would reiterate that we have recorded this session, and it will be available for people to go into via the Chamber website, kilkennychamber.ie. You'll find it there in our news. There'll be a link into our recording of this on our YouTube channel. And as I say, CR Payroll is our presenting company next week, and their focus is very much on how to adjust your payroll systems and processes to best facilitate this new EWSS. And I would again just remind you to please email us and let us know that you are interested in going. So I'm ending the poll now, and the result is that 70% of you feel that you will be able to avail of this. So that's a good result, and kind of corroborates or suggests that it was worthwhile doing this event. So again, just to thank you all, thank our presenters, and thank you all for attending as well. And hopefully you found it useful and that you will join us again next week. Thanks very much.